Hello everyone, welcome to the IchimokuCharts.com daily analysis for light sweet crude oil for Monday, August the 31st. Well, a fairly bearish candle today, and we have the establishment of a new first time frame downtrend. We can see that we have a lower high and a lower low. Previously we had a higher high and a higher low, and we now have a first time frame downtrend in place, but we also now have a second time frame downtrend in place. The fact that the candle took out the swing low there today means that the market is in a second time frame downtrend, and I'll show you how we determine that. Here we have a peak, and we're looking at the swings, where the swings of the trends in the first time frame terminate. So here we have an uptrend in the first time frame. We have a first time frame downtrend established. That there becomes a peak. We're trading down in a first time frame. We have a first time frame uptrend established here. The lowest low in the swing down in the first time frame becomes a trough. Here we had termination of the first time frame uptrend to the downside, and the highest high in the unbroken sequence of first time frame uptrend becomes a peak. And here we've taken out the trough here, so that becomes a lower trough. So here we have a peak, a trough, a lower peak, and a lower trough. So we have a second time frame downtrend, which is quite an important thing for this to take place in this market. Now, interestingly, we can see that this area that we identified previously at 73.38 as an area of resistance now, and the market attempted to rally. We've opened at around this level, around $71. The market's attempted to rally to 73.38. It almost traded up to there, and then the sellers came in and sold the market off fairly aggressively. And we can see that from the very long shadow, the very long wick on the top of the candle, and that's selling coming in. And the market's closed between the mid-range level and the low, and that means that the bears have taken some sort of control of the market. They're very keen because the market has closed a long way away from the previous close as well. So quite a bit of bearishness in this market at the moment. Now, we know that the Kijun-sen can act as an area of support for this market, so we'll be looking to the Kijun-sen, which is at 68.85, to hold as support for this market tomorrow. Very important for this market. If that level doesn't hold up, then the market will most likely trade down to around the $66 level, or potentially below there to the Cloud or the Kumo, which is around 65. So there is strong potential for that to happen. If we look over here, we have a previous swing high in this second time frame uptrend that coincides with the Kijun-sen, and that's a previous area of resistance, and there's every chance that the market will find support at that level, which, as I said, coincides with the Kijun-sen at around 68.85. So that level becomes very important for this market to hold up. If it doesn't hold up, as I said, the market may sell off perhaps roughly about 10%. There is potential for that to happen. There is, though, still potential for the market to rally up, and we need to watch this area of resistance again, 73.38. If that's taken out, then there's potential for the market to retest the 75 area, but this market is fairly bearish at the moment. I doubt that the market will do that within one day. I assume that the market will continue to sell off. Whether it does it substantially will depend on how this Kijun-sen holds.